Hi everyone, it's Don. It is March 29th at about 9:20. I wanted to give everyone a view of a process that we like to use on occasion. Now we are mechanical robotic traders and we use a lot of specialized charts from point and figure, classic Rinko, custom Rinko, line break, range bars, and we're very fond of them all, but we will also use time bars. And you're looking at a time bar measured in days of the S&P 500. Now, this little line down below is, and these are Bollinger Bands. Now, we happen to be running a strategy on here, but we're not going to talk about that. But I am going to talk about these Bollinger Bands and also this product of John Bollinger's, which is his, called the %B. And as a general rule, we would prefer to be buying on the low end of the Bollinger Band. We would prefer to be a buyer in here, buyer in here. Those trades would have worked out. Would have preferred to have been a buyer here. Would have preferred to have been a buyer here. On the short side, we would prefer to have been a seller here. Would have been short-lived. A seller here, probably got stopped out. A seller here. Maybe a seller in here, would have made a little bit. A seller in here, would have made a little bit. A seller in here, made a little bit. A seller up here, would have done very well. Maybe a seller in here, little pullback, and a seller up here, and he would have done very well. What we're looking for is when price punches through either the upper Bollinger or the bottom Bollinger and then comes back. So we don't quite have that here, but we're getting close. The upper Bollinger is about 4103. Now, just because price punches through doesn't mean that you run out and get short the market, but it will be in what we call the red zone. And once it does, if it does, it could be as early as tomorrow or Friday. But if it does punch through, what we will be waiting on is for a return back inside the Bollinger Band. Now, this tells us where it has punched through, and it's got some distance to go. It will also tell us how it takes shape as to whether or not we have what we call a false high or a false low. For instance, down in here, this was a true low right here on that bar. We went lower, but the %B did not. That was telling us that this was a false low and likely to run back up. If we should punch through and we get above here, which is what would happen, and if we go higher and the %B does not, as it did right here, 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 and as it did right here, we would have what we call a false high. So there's no guarantees that we're going to get to 4103, but if we do, we will have our bear suits on. We will be coming out of the bear den, and we will be monitoring not just this setup that is yet to come, but we'll also be monitoring all of our other tools as well. And when the time is right, we will place position trades going out weeks, maybe even a month or two. I'm Bagadon at StockMarketCaddy.com. If you want to learn how we go about trading the markets, be sure to visit Stock Market Caddy. Write down your questions. You're free to email them to us and I'll answer your questions. And if you're really serious about joining Stock Market Caddy and maybe wanting to become an annual member where you can get all of the tools that we use on your desktop, you are more than welcome to call me any day from 813-758-8263, 813-758-8263 from 9 a.m., which is what I was about to say, from 9 a.m. to 9 p.m. any day, including weekends. We wish you the best. Timing is everything. Need to be patient, need to be disciplined. You also need to know what you're looking for. We've done this hundreds of times, if not thousands of times, and we're happy to mentor you if you're interested. We wish you the best. Good luck.